let's discuss first of all about these things. I don't know if all of you are seeing my screen right now.
I have it up, so it's gonna be separate from the MonsterCalls avatar. You just click watch stream and it'll pull it up for you.
Okay, so right now I'm sharing my screen. So in my screen, what you see over there is the candle link. So this candle link basically it's a data that every week is uploaded. Okay, it's once a week over here. And what you will see basically is that in this case we are looking at the mini Russell that it's where mostly I'm interested to. And basically this is a graph in regards of the COT, so the commitment of traders. What is the commitment of traders? There are hedge funds, investment funds, market makers, and a few other groups that every week they basically report their positions. Okay, and this position is regulated, and later on it's shown basically into this commitment of traders. So this is once a week posted out, and basically it's showing you really how the big money, okay, are moving into the market. So what we have here, there is if you can see, there is basically over here a gap without data between 2008 and 2018, and then they start again in 2018 to 2021. So here is 2021 where we are, and what I did at the moment, I just zoomed basically the area of 2019 till 2021. Over here, you see you have uh, different options. Okay, here you have dealer longs and dealer short. That basically these are the market makers. Then you have asset managers, long and short. Asset managers are basically in hedge funds, investment firms. You know that they use other money. For example, I give the money to an asset management, and then they invest this money for me. Okay, so basically these are institutionals. So where I'm mostly interested all the time is in the open interest and in the dealer long and dealer short. Uh, so first of all, we are going to evaluate this open interest. Okay. So what you can see here, these are the data of the open interest. The open interest is also on the option contract, and it's basically the money that are flowing into the E-mini Russell 2000. If you don't know what is the E-mini Russell 2000, it's basically the index where all the small and mid cap are inside, and there are around 2,000 companies inside the E-mini Russell 2000. Okay, that's why the 2,000, and basically all the small and mid cap. So basically you have all these penny stocks that are traded, low floater and whatever. One important point about this area, what you can see here on the open interest is that during the period that goes from January 2020 till April 2021, so this is the last year, the open interest was quite high. Okay, so you can see over here that the number is above 500,000. In October 2019, April 2019, and before, it was under the 500,000. So basically, what we can see is that during the period where all the penny stock were running, there was also a lot of money coming to penny stocks due to the hedge funds and especially market makers that they have really big money, and they are the one that decide basically when a stock, when something have to move or not, because they also have algo machines and they have automatic traders. So basically that's what you see over here. Um, what we can look at is that if we stay above 500,000, okay, so here we have a decline around July and August, and we are lower than 500,000. Sorry, around 510,000. And over here we had also a market that was quite slow, and then it's picking up again. till March 16. This is the point, and this is very clear. Since March 16, as many of you have noticed, okay, a lot of penny stock were bleeding. You can see also over here how the open interest declined. And basically, we went back to the same period of 2019. So right now, with small and mid cap, we are not anymore in a bullish area. So for swing trading, okay, what you will see over here, this is a safe area for swing trading. Okay, right now, this area it's not anymore so safe. Okay, so whatever you buy right now in penny stocks, in the mid and small caps, you risk really to take a loss. Okay, you never know if these things is gonna go back up. So if you want to swing, in my opinion, something, what you need to do, you need to look always at the open interest. So you will see if the money are running back up, and maybe you have a chance over here to get again some good penny stocks that goes up again. So this is a really important point. I don't know if you ever seen this one before, but uh, you are someone that doesn't have the power, okay, to move a stock, to decide what has to be. So what to do, you just follow the money. And if the money are out, people are removing money from the market, then basically they are selling, and then you remain a bag holder, what they say.
Yeah,
Okay,
bag
so
holder.
basically you buy a stock, and then people are selling off, or big market maker are selling off, and basically this is what you get. Okay, as a result, you
And I
remain
think
in the stock when everybody is selling out.
Yeah, and I think what else we can touch on here is because this is like the E-mini Russell index. A lot of these stocks are like super heavily affected by volume, and so if we have low open interest across the board on this index, that's going to mean that we don't have a lot of liquidity or volume coming in these stocks. And what does that really affect the most? That's going to affect our low float penny stocks or low float, even mid cap stocks. And those are going to see like a lot of selling pressure until there's any sort of consistent amount of liquidity in there. And until there isn't, it's just going to be, finding support.
So as you know, I have catch all this short position properly by following this data, okay? So I know that basically everything is going down, and you can understand how the market is reacting by following the open interest. Now, what you can do also over this link that I will send you after this webinar. Okay,
This
most probably
link
you
is
have
actually
already.
in the announcements channel for King Street, so you can follow along right now if you want. Just
Okay,
yeah.
so it's already over there. What you can do, you can click over these voices. Okay, you have dealer long and dealer short. And what you will see over here is the short and long position of the market maker. So the market maker are going long or short into the market. So right now, the long is the purple line, as you can see over here, and the short is the darkest line. Another point you can look over here is that on March 16, the short position increased compared to the long position. Okay, so you can see that we had long position that was higher than short position, and when the market started to decline, the market maker was taking short position. Right now, it's look like it's in a phase that maybe it's gonna go back up. Okay, where long position and short position are matching together. Basically, also over here you can see that market maker, okay, are taking short position instead of long position in a declined market, and that's normal for them. You can see over here during this period, okay, that we have been bullish, and then again in January we had really a crazy market between January. You can see over here that basically they were long, yeah, but you can monitor always this trend line over here, and basically you can understand if they are going to take short or long position. You can see also the market volume. Okay, so if the market volume or the open interest is too much and the short position are quite big, anyway, this is not a good sign. Okay, so the open interest and a lot of short position, it means that they also expect the market to go down. Okay, and a decline in open interest and also an increase in short position, it's not good for the long position into E-mini Russell 2000. Do you have any question about this point? Is it clear?
If you guys do have any questions, we have the trading room. That's our public channel for you guys to write in. So just ask any questions in there.
If no question, then
Well, we got one question. We got, are there any other websites to find this information? And yes, there are lots of websites that have the commitment of traders. But I do like the Condor website just because the format is really legible. So
yeah, you just have the proper graph over here, and then you can select also the dealer short and dealer longs.
yeah,
This is quite free, so you don't have to pay for this. Candle is a payment platform, and is from Nasdaq anyway. Okay, so this is real data that you get updated every week. Over here, you don't pay, so it's updated every week, and then you can see the position. But if you want into a premium service, of course, you have to pay for Candle. I don't pay anything in the premium service. I don't have any premium service with them. So this is just the free view, and you just can look at what the market is doing. Okay.
perfect. And then someone asked, what happened in August 2017? You joined sort of late, but we didn't actually talk about August 2017 specifically. What we're doing here is this is tracking open interest, dealer long and shorts, which is like the market makers, directional. So you can scale all the way back.
There is no August 17 here. What you can see over this area, 2017, there is nothing. So this data, it was missing from 2008, November 2008 till September 17. These data were missing. There are no data available, okay?
There it is, yeah.
So that's why I don't have anything here.
Yeah.
It's not available data. But then you can follow up from 2018 till nowadays. So right now what you can see is that we are exactly on the lowest point of the open interest again. Okay, so we had a spectacular market in January, February, March, but then we have a decline, so that's where we are.
And the very drastic decline too.
Yeah, and what you can see also is that when we are below 500, okay, below 500,000, short position normally are higher, okay, so that's a constant. And later on, they start to grow up short and a long position after that. So here again, there was a big sell-off, open interest decrease, and then short position became more than a long position. So basically, yeah, if you're going over here to buy a penny stock that you believe it's going up, most probably you will lose money, or at least, you're gonna hold a stock that will bleed more and more and more.
Like that's swing trading. Like if you're doing a bounce, I mean, you're still gonna get some opportunities for a bounce swing, but that's gonna be a really quick position. It's not gonna be those 2 to 8 week swings that we're used to seeing. And then another thing you want to notice on this chart for the commitment of traders is when you're looking at the dealer long and shorts and the open interest, you can see we have some high open interest here, but we had a lot of tussle between like the shorts and longs, which side was carrying more weight. As soon as the open interest dropped off, the dealer shorts popped over the longs. Now you can see like longs looks like it's curling over and you might get a pop back, but if that open interest stays under 500,000, then those dealers shorts are going to have an easier time staying above the longs.
Yeah, right now you can see that we get back some volume again into the market, okay, of penny stock. We have few pennies with some volume over there. That's why also we can see that the longs are going above. Maybe they're going to pass over the short next week. Maybe. Again, normally there is a tendency that most probably it's going to pass. But if anyway the open interest is lower, what you will see is that one stock is running or two stocks, while the other in the meantime are going down.
That's exactly
Okay.
right. Yeah. So
So
that's when
basically, if you are
sympathy plays don't
lucky,
work.
if you are lucky, the stock that you are holding it's gonna get a move, and otherwise, it could continue to go down. So the best market normally is when the open interest is higher. Okay. So and higher open interest, it's good. It's good because there are money inside. That's it. It's just about the money. So what moves the market? It's the money. If the money arrives into the market moves. If money doesn't go into the market and it's moving somewhere else, of course, there will be more sell pressure than buying pressure, okay? Because people are not attending to stay into a stock.
One other thing I want to note.
Other people start to sell. So what you will see, yeah.
Oh, sorry, no, you go ahead. I froze and I didn't know.
No. You can ask question, no problem.
Yeah. So one thing I wanted to note here was when the open interest drops off from the market, and like what Monster is saying is that means that people are selling, they're taking capital out of the market and they're putting it elsewhere. So another way we can sort of hedge against lack of open interest in the market, a lack of liquidity, is you think about where that money is going to be going. A lot of that money that's been taken out of the market recently went into banks, and you saw banks, that whole sector, you saw a lot of strength recently. So that's something you want to consider as well when you're tracking this commitment of traders is, where is the money going? And how is that going to, is that an opportunity for me to hedge against this?
Yeah. So the webinar of today, it was just about the commitment of traders, and about the Himini Russell 2000, and I think this is gonna give you a better view of the market. It's not just like going blindly thinking that whatever you buy now it's gonna make you money. It's just telling you, well, if you buy now, you're taking a risk, especially if you buy over here and you alerted something over here, then I don't know. It's a suicide in my opinion. And that's what you can see about all the stocks. If we look, for example, at March 16 till April 27, okay, so we're going to go over here and we write down, for example, ZOM. Okay, ZOM is disgusting, but that's okay. So we can see here between mid-March till now, you can see that from 250 to 085. Let's take some other stock. I don't know. We can look at everything.
And it's the same thing. You can see the open interest was high when ZOM was able to run, and as soon as the open interest dropped off, it dropped off. Same with this chart here, SOS. It had the flexibility to move because there was a lot of money in the market in small caps. Yeah.
Watching here between January 26th and February, and March. And then after that, in March 16, you see over here we have really a lot of volume. And then from March 16, everything starts to bleed. Mm-hmm. So if you look around this area, it starts to go down everything. We can look also some other things. For example, okay, this is just bleeding completely all the time.
DraftKings, try that one.
DKNG. Yeah, but you see that there is a big sell-off. I don't know.
DKNG, that one, maybe?
Here in Naked, okay, it was over here the spike, but then it's still going down, and now it's on this trend line. We can look at few other tickers. Okay, this is anyway over here. You can see it's never going back up, especially March 16, around March 16, watching these big candles over here. So it's dropped from 31 till 20, so just lost
With
something
huge
like
volume.
40%, yeah?
Yeah.
So we can look now here, it's had few news, try to go up again.
And so that's when you see
Then
the,
March 16 over here, yeah, this it was already bottomed.
and that's when you see a bit of the dealer
Occasionally,
longs assisting, it seeing some strength there as well.
yeah, this is wow. We should play over here a put, huh?
Yeah, yeah. Well, if you get a bounce to 55 or even 53, that's where you want to get puts now. I mean, it broke trends, so I was
Yeah.
I was targeting this since like $60 as a short, and
Oh God, I
now
missed it.
now it's broken that support trend line that was really key. So we're gonna probably see, DraftKings head towards this $40 support level. First, it's got to reject.
Mhm.
It's got to reject like 55 a little more. So we'll see that.
Yeah. Okay. So, do you have any question about the commitment of traders? This is updated weekly. Okay, it's not every day. You don't see a change every day over here. Normally, you will see on Thursday the update or on Friday. Okay, so it's one time per week because they report one time per week their positions. Okay, if they are long or they are short, and the open interest over there once a week. And over here, you can select dealer short, dealer long, long short. So for me, the most important are the market makers. Yeah.
Mm-hmm.
So, and that's what you get.
And that's the dealer long and dealer shorts. And those are important because the market makers, they're controlling the spread. So
Yeah. Open interest, dealer long, dealer short. That's it. That's basically your your
so
key. And over here, you can follow up the money.
so one question we had, uh, someone wanted to take a look at something else other than the E mini Russell, for this.
Uh, we can look at Standard and Poor, but over there are so much money over the futurist that it's even if it's going down or up, you cannot really. And then you will see over there a lot of long and short position, at least in candle. You cannot follow up. You have also over here, let me see, um, futurist goes to S&P. Over here you see the commitment of traders, but it's basically not so clear, same as
Yeah, there's no clear directional shifts. It's just a lot of like consolidation.
yeah, it's normally stable over here. You don't see so much, but you know that anyway. There is all the time a lot of money coming over.
Yeah.
Something I noticed in relation of option trading. If we go over here, what you will see, for example, okay, we can look at few tickers. We have Roku, ROKU, we have PLTR. See, these are all sell position. ZM, Amazon. We see also Facebook. Okay, so a lot of sales. And if you look at this insider trading, and then we take, for example, there was also PTON and Uber, I believe so, somewhere. So if you look at this,
That's a
and
lot
then
of
we
selling.
take AMZN, you will see here, pump, pump, pump. Okay, it went down. So by following the insider transaction when they are huge, then basically, Yeah, you can take put or calls.
Especially with like
Yeah.
a high role officer or high ranking officer like your CEO founder, if they're selling, that's going to
Yeah,
have a really drastic effect on the stock price.
yeah. But this is something maybe we can talk next time.
Yeah.
This is the DOG, for example. The DOG, we can look over here. And that's also what happened. Watching here. It was a beautiful put if we only had a look on the insider transaction. Anyway, I think we can discuss about insider transaction next time. And for today, I think we are done if you have no other questions. So
Yeah, that was a
the
really good stream, I think.
link is available. You can save this page over here, and then you have the Himini Russell 2000. Follow up dealer long, dealer short, open interest. If the open interest goes above 500,000, the market it's gonna go bullish again with the dealer longs above the short, okay? Or if they are close to each other and they are fighting a bit, anyway, above 500,000, it means money back into Himini Russell. And basically, yeah, you can go more safe into your penny stocks swing.
Yeah, and that's all this is for. Is it's an extra tool for you guys to factor into your trading plans before you take any trades, or also to assess your current positions. You got to be looking at like what's happening in the market, where it's heading. We're gonna have this stream recorded, and it'll be on our YouTube. So if you just hopped in and you caught the last couple minutes, don't worry. Just I'll put the link on the YouTube for you guys. And thank you, Monster, for coming on and doing this. And
Oh, no problem.
I think it was really
Hope you
helpful.
enjoy it.
Yeah, definitely. I can hear the birds for you. So go enjoy your day.
Oh,
Sounds
thank
nice
you.
out.
I'm going now. KKR puts, huh? I agree with you. Okay, guys. Bye bye. Have fun.
Perfect. All right. Yeah, have a good day, guys.
Bye.